Hello everyone and welcome back. My name is Greg Firman, market analyst here at TraderPlanet.com, and these are the market positions for March the 23rd, 2010. Now our first position for tonight is going to be in gold futures contracts. We can see that we have a fresh crossover from Vantage Point starting on the triple EMA crossover, which is our key indicator. We're going to now identify our pivot resistance, which comes in at 11:14.30, 11:13.30, and 11:08.20. Now, looking at this, we can see that gold is under some volatility. We almost crossed to the downside last week. We had this volatility moving lower with gold moving down into this 1198 area, only to turn around and rebound higher. Now, we've got the 3-day crossing over the 8-day and the 18-day predicted moving average, and we now have the 8-day getting ready to cross over the Vantage Point predicted 18-day moving average, suggesting that gold is getting ready for a bigger move to the downside. Now, going into our short, medium, and long-term crossovers, we're going to see how this looks. Now, identifying the short term, in the short term, we can see here we've got this crossover, excuse me, from Vantage Point that took place towards the latter part of last week. Looking at the medium-term crossover from Vantage Point, I think it's important to look at all three time frames here. We can see that we have a crossover, a fresh crossover on the medium-term crossover from Vantage Point to the downside also. Now we want to see the long-term crossover also, but we're going to get in a little early here. Now we can see here that the long-term crossover from Vantage Point actually crossed over by the looks of this, about the latter part of the first week of March. So even though we've had this volatility here, the long-term indicator from Vantage Point is saying it's going down. So it's very interesting that we look at these multiple short, medium, and long-term crossovers from Vantage Point to get a very clear picture of what's happening. Now, once we've done that, we're actually going to go in here also and look at one of Vantage Point's patented indicators, which is the true strength indicator, a very good indicator that I like to use. Now we can see the true strength indicator here from Vantage Point on gold has very clearly crossed to the downside, which pretty much coincides with this crossover here, the 3-day crossing over both the 8-day and the 18-day predicted moving average. Now again, this particular indicator can only be found in the Vantage Point software. That's one of the reasons I like using this program, because it has other indicators that other programs simply don't. So again, the gold contracts, everything looks good here for this thing to go lower. Now let's go in here. Now that we've gone through our major crossovers, we've identified our pivot resistance area using the pivot resistance areas using the Vantage Point predicted moving averages. We're now going to go into the daily report and have a look and see what's happening for tomorrow. What our range is going to be, what can we expect for a predicted high and a predicted low in the gold futures contracts. Now we can see here this is the second day of the neural index. We also can surmise here that we have the 3-day crossing over the 8-day, the 18-day, all of that's taken place. The predicted short, medium, and long-term differences on gold have all turned negative. Another very positive sign that this trend is going to accelerate to the downside. We have 1192.90 as the low tomorrow and 1107 as the high. So we're going to be using Vantage Point's predicted high of the day just under this 1107 area to get into our sell positions. Now again, the beauty of the Vantage Point software, we can pre-identify these levels. By doing that, we can wait and allow the market to come to us. So when the market approaches 1105, 1106, we're going to be looking to get into sell positions based on this analysis using the Vantage Point software. So again, the picture is starting to show itself here in the gold contracts that it looks like the commodities in general are going to be somewhat soft over the next couple of days. And that may not necessarily be just a couple of days. That may last considerably longer than that. So with that said, our focus is going to be on the commodities for tomorrow's trades. We're now going to switch gears from gold futures contracts into New York Light Sweet crude contracts. Now our triple EMA crossover is to the upside here, so we're going to be looking to get into short positions, I think, on the crude contracts. We're going to go through the analysis to make sure that's correct, but again, we're not necessarily counter trend here, because what we're going to do is we're going to break this down using the program to see where the crossovers are. Are they to the upside? Are they to the downside? Which direction is crude going in? So we can see in the latter part of last week that crude oil contracts from Vantage Point suggested that it was going to move lower. That is in fact what's happened. So in the short term, we're looking at further downside pressure on crude oil contracts. Now, looking at the medium-term crossover from Vantage Point, we can also assess here that in the medium term, it's also, the program is also suggesting it's going to move lower in the medium term. Now, looking for that longer term crossover to confirm things, we can see that we're just in the process of getting that crossover on crude oil contracts to the downside. So we're going to be looking for confirmation of that, but for now that's enough to let us get into this trade a little bit early. So in a move higher, much like the gold contracts, we're going to be using that to set our short positions. Now again, we're going to put on the predicted true strength indicator from Vantage Point to see what it's saying. First thing we want to point out is that we're in heavily overbought territory here. We've crossed the true strength indicator, has crossed over to the downside, however is then turned around back up and is sitting right on the trigger. So looking at the other indicators, this suggests to me, we can see right here these three candlesticks have broken through the 18-day predicted moving average over the last 7 days, suggesting that the major support level, which is the 18-day predicted moving average from Vantage Point at 80.62, is getting ready to come under further pressure. So again, we're looking at short positions on these crude contracts. Now, looking at the pivot resistance here, we've got 80.62, 81.21, and 81.19 with a close of 81.25. So we're going to be looking for tomorrow for a sustained break of the 80.62 level. So what we can do from here, now that we've identified which way we want to trade this, we can go into the daily report from Vantage Point, have a look at the predicted highs and the predicted lows, and see if we can narrow in on our entry point. So we have this is the second day for the Neural Index pointing downward. Predicted short, medium, and long-term differences have all turned negative. 79.75 is our predicted low for tomorrow, and 82.16 is a predicted high, with a close of 81.25. Now going back into our predicted moving averages, we've identified where the potential high is. Now again, 81.19, 81.21, and 80.62 are our predicted moving averages. So we know that there's going to be some volatility in the crude contracts. So we're going to be looking to get into sell positions just under that 82 level. I would say around the 81.90 area is probably a good entry point. And then our stops would be above the 82.75. Preferably, if you can afford to, just above the 83 mark to stay out of that intraday volatility, because again, the crude and the commodity prices have been very volatile as of late. Now, one last thing what we're going to do on these two trades, because there is a high correlation here between gold contracts and crude oil, we're going to put them up side by side here and see how things look. Now, taking our two trades for tomorrow and putting them side by side in comparison, we can see that there's been a very high correlation. Light sweet crude, New York light sweet crude, and gold contracts have had a very, very high correlation. We can see that this crossover to the downside back in the end of January, almost identical on the light sweet crude. Now, going back up here, we can see the patterns in the Vantage Point software again. We pushed a little higher only for it to hit and move lower. Only recently has gold experienced further volatility, and we can see over the last basically 30 to 60 days that this correlation between the gold contracts and the New York light sweet crude has actually started to break down a bit. So it's very interesting, and it's something we certainly want to take into consideration. Now we can see that gold experienced this volatility last week. Crude oil experienced volatility, but not as severe as what the gold contracts did. Now we have gold contracts moving lower. We've almost got a triple EMA crossover completed yet again, all within the same 7 to 14 days, which is certainly a point of interest here. So again, we want to look at this. Right now we're using gold futures contracts to some degree as a leading indicator for New York light sweet crude. And again, everybody will remember, if they reviewed the Forex market outlook for the week, the natural gas contracts, again, very high correlation here. And I believe that this correlation that broke down in natural gas and New York light sweet crude, I believe will correct itself, and both the natural gas and the crude contracts will start moving lower together. But for tomorrow's positions, again, we're going to be looking at shorts on gold contracts and New York light sweet crude. So those are the market positions for March the 23rd, 2010. And again, my name is Greg Firman, market analyst here at TraderPlanet.com.